Okay, that should do it. There was some setting that was off. Hear me now? Okay, cool. All right. What I was saying is that we start this week with this tricky buy setup and started last Wednesday with the new high. And then that reversal where prices came down really hard intraday. And we got the big red bars. Doesn't look so big over here, but compared to the way up, it's relatively big. So as we look at different markets and the stocks, we've got this red bar from last Wednesday after making a new high. So general buy setups are just multiple bar pullbacks, count them whatever you want, 3, 4, 5, whatever, into some area of support. And then you get a reversal of some sort. This one's a 1-bar reversal, which I don't really care for, 1-bar reversals. They're doable, of course, with the right conditions. I'll explain what I think the right conditions are. They can be 2-bar reversals, 3-bar reversals. So between 2 and 3 bars are ideal because it spends more time in that area of support, building up an intraday base also, as well as having a few daily bars there. So with this one, we've got this red bar. We're close to the red bar. We've got a shallow pullback. It is at support and it isn't an uptrend. So buy setups only happen, I shouldn't say only happen in uptrends, but the best ones, I would say, because you have a continuation of the trend versus some deep pullback that breaks support, or in a downtrend, you can have climactics and so on. So 1, we've got a big red bar after making a new high. 2, prices are relatively close to that red bar, which suggests their sellers are lurking just above. We've only got a 1-bar reversal, bottoming tail bar, and it's shallow. So, and you can see the futures here have cleared the high, which triggers the buy setup. So we've got this buy setup with an undesirable big red bar reversal at the high. It's close. It's shallow. Now, while anything can happen, of course, this could go on and obviously make new highs. It could make slight new highs and come right back in, which is what the formation of an M top is, which often happens with buy setups that are like this. They form M tops, especially after, this had a run. And, we've been talking about the internals for a couple of weeks, which you can see are backing off from their far extremes where we got the sell setup. So no break of trend as of yet. And so we'll see what this brings today, tomorrow. So Monday, SPX. Well, obviously it's going to be above here, above the high. What premium is there above the high? Question is, how far away can you get from the high where there's enough premium to make it make sense? So anytime you're going to do a bear call spread, and it's above an area of resistance, we use charts, not Greeks, to do this. You just simply look at the options table and say, well, if I don't think it can get above, let's just call it 37.20. We're not on SPX. We're looking at the spiders, ES here, but we look at SPX. It's the factory work. If I think it can't get above 37.20, I look at the options table and I go, okay, 37.30, 40, 50, 60. Where's there enough premium that makes sense for a 0 DTA spread trade that we can put on and get away from what I call the danger zone? And since it's new all-time highs, if for whatever reason the markets were to take off, you don't know how high it'll go. But again, back to this tricky buy setup, as I've called it, it shouldn't go that high above here today. So pick your comfort zone. How far away from this area are you willing to go? And of course, down below here. Now, one of the things with this kind of a buy setup, sometimes they don't get up to the high. And this is something we're going to be interesting to see today and tomorrow as to how these bars shape up and what happens. Because sometimes this will, I'm trying to get my little drawing thing out here. Let's assume that it closes like that and we get this the next day. Historically, that results in this. So keep that in mind, into tomorrow. We'll deal with today, of course. But a lot of times this particular setup that I've explained can result in a failed buy setup and a measured move lower. So those are the two scenarios for now. Of that, I don't think this is going to get very high today anyway. We'll see what this brings. And, internals warning us, as they have been, increases the potential for an M top, even if it makes a peekaboo to a new high or a failed buy setup and then back down. Well, I wouldn't buy puts right here, McGraw. Oh, you mean on the put side? Well, I think the safe thing would for today would be above or just below 3,600 to sell a bull put spread. So you've got this area as your a line of protection somewhere in here, and just looking at. So you could say, okay, I'm feeling pretty feisty today. I'm going to go for 3660. And I would say, well, better you than me. I'll sit and watch the action here. It sounds exciting. Got that unfilled gap on the futures that had come into play. And then, of course, for scaredy cats like me, down below here, would be, I would consider a no-brainer. Are you saying 3640? Well, you've got this and the gap, 3650, just a number, but there's nothing to the left. So I think 3640 is reasonable. I think it's reasonable. Yeah. So very well, McGraw, you're doing this a long time. So, I mean, as far as these numbers that we pick like that and getting close to this area, now this is just a thought, is, okay, I'm in trouble here, right? Let's say we go with a 3640. I'm in trouble here. It's down there, but I got this low, which is pretty close. So while this would be, let's just make up names here and call it the sweat zone, where I'm in trouble here, I am effed with this SPX spread. Well, all right, let me just hold my breath here, because that's a pretty significant low there. And depending on how this fell, right, just think about it. If you're an SPX, if you're an ES trader and this thing fell down hard and you get a tick extreme down here, we're going to be buying this, and it could push it back above your level. So we don't want to be in that kind of a position, but rather than, taking a loss at the low, that thought process, whether you're trading a stock or this, comes into play is, hey, what, am I going to exit out of position right at major support after prices have fallen sharply? I'm not gonna. I shouldn't be in that type of a situation, but I'm not going to. I'm going to sit there. I'm going to say, okay, that means if it doesn't turn around, that X amount of losses, is that acceptable to me? If it is, I'm going to sit there and take the heat. If it's not, I can reduce the position or exit. All right, let's look at other markets. So, okay, SPX. Let's see what it relates to on SPX here. So above 3720. All right, so we're going to say, okay, we've got this set up as I explained. We don't think it has a high probability of doing something significant today. Okay, fine. Anything's possible. So let's be safe and let's just call it 3720 or better. Right? And then down below here, personally, just looking at this pattern, I would say even if it breaks today's low, this thing gaps up and just craps out immediately, And let's just get my drawing thing out here for a second to explain. Very difficult with this thing to grab what I want sometimes. All right. So consider the range here, right? Friday's range. And here it is. There's the numbers. It's 32 points, 32.51. So let's just say gap and crap. It gaps up here, right back down to the low. That's support. Now let's project 32 points down. So 40 puts it just above 3,600. I would say the probability of getting down to that area today is extremely low, unless, they just injected 1 million people with, Corona life-saving vaccine and they're all dead. Well, this thing's going to go down, like a bag of rocks. But let's hope such a thing never happens. But just sticking to the charts, let's just go with, this idea of projecting the prior bar's range down. So to get down here in and of itself would be big. To go with another range bar, right, to the downside. Now, part of the difference here is if we were starting with a red bar and we projected it down, well, that's probably very likely to do, right? But to go down below a green bar, right, one that closed near the high, to get below that and then project that lower, the range of that bar, it's unlikely to do that on a day-to-day basis. So that is a way. And besides that, you've got very significant support there. So there you have it. All right. Qs have been the weaker, and you can see the bar is much, much bigger, right? So looking at this type of a bar, which is much more ominous looking and thinking, okay, is this a trickier buy setup than the S&P? You betcha, right? Big red bar, down vertical. Now it's got two bottoming tail bars, so that's good. To have two bars there, and you can see the structure of the formation here on the 60-minute chart and the void above. So assuming this turns right back up again, wide range bar, void in a smaller time frame, sideways price action, void above. That's an attractive pattern for a day trade if it can clear the high. Now on the downside, it came up at a pretty good pace, and we got that gap, and so if it can get below here, below 12,400, it could go right back down. So right now, clearly, we've got a little trading range going on here to start the day, even though the numbers, look at the numbers. Oh, Nasdaq's up 60 points. Okay, looking at the chart, big deal. Let's see if it can get through here or down through here. Otherwise, we're SOH, sitting on hands, as we do in trading ranges. And the Dow, which has been steadily losing momentum here, it's like, wow, right? All right, pull back kind of deep into support, barely makes a new high, jiggle, so it's really, really close to the high, which means relatively easy to make a new all-time high, but we got resistance right there, right? You can see, I can draw a straight line, I can't. Anyway, so we'll be seeing if we can get a little higher there or whether this turns back down since the sellers are right there. And so not a great setup here to start the morning for the moment. The Russell has been the strongest, and it's just grinding here, right near the high, but kind of wild and whippy price action. Look at the weekly here. Nice 180 reversal, really nice, right? Bullish 180. Up it went, grinding. Last week, the momentum stalled. Right? So with all the sectors, ETFs that we monitor in the ETF trader, there wasn't one trend change last week, which Okay. There's usually one or two, on the daily time frame, nothing. So whatever movement there was last week, primarily it was, starting the week up, pop on Wednesday, down hard and recovery of some sort Thursday and Friday. And at the end of the week, not much of anything really happened. So a lot of things up, as you can see here, momentum stalling, internals where they're at. Christmas is coming, end of year rally, seasonality versus, patterns and internals. I don't know, it's kind of seasonality says not much to the downside is going to happen. Probably not, especially with the way things have formed, which I call a self-correcting uptrend. I'll go back here and, little, push down, push down, push down. There's lots of little support areas below that could stop prices from moving lower. However, on an intraday trading time frame, what we looked at, especially with the S&P, you got intraday voids. So while intraday there could be what could be meaningful moves for day traders, as far as swing traders go and looking at the market indices anyway, it doesn't really suggest anything of significance is probable right now, meaning today. And we'll see what tomorrow brings. Yeah, we looked at that pattern. Bonds are just a gigantic mess. Where they're just hanging here at this support down there. Just can't get moving. Oil continues to hold up relatively well. When I see this, I think I explained this on Friday, this setup, this resting period, and it pops and closes with a little topping tail. Like, should have closed at the high. All right, well, now we got this little inside bar here, and you got to watch that for a breakout bar failure. So what we would have to do is trade under Friday's low. And you can see the weekly chart is one that would support that possibility of happening. Multiple bars up, momentum stalling after a greater than 100% retracement. Come on, gold. Just messy. Gold is messy here. So kind of looks like it could roll over, but beginning of a breakdown failure. We'll just stay away. And silver has done better. It held the pivot lows there, but it's still within this range. So nothing to do there either. And we always take a look at the transports, which similar to other things, grinding, self-correcting uptrend and so on. So there you have it. Some intraday patterns, just moves possible here. Market moving something of significance. Unlikely today. All yours, Dan.
All right. Good morning, everyone. Yeah, when I was scanning over the weekend, I found plenty of bullish patterns. I said in the video, based on the close, as we were saying, we looked higher with the close on Friday, and let's see how far we go, as Greg described in detail this morning. All of our opens are fine. If you have any questions on anything, just ask me. Actually, we have a Zoom call spread, and that's gapping down, so that's good. With the Pfizer news, I don't know if that's the reason for the market up. Who the heck knows? But they've been playing this vaccine news for a long time. I see some of the junk bouncing here again. Airlines, we're still in Norwegian Cruise Line, getting a nice gap up. We're just in trail mode as earnings next week. We've been in this for a while. Let's look at other gappers. Okta, Khaled mentioned, yeah, it's a 180 reversal, breaking out daily, weekly, bullish monthly. Yeah, sure, that's worth watching. Steve, JKS. We were sure Greg nailed the short on this, on this sell setup on Friday morning on the bounce. That was very nice. gap breakdown. Now it's gapping up to resistance. There's no great pattern there to me, but that's right where it reversed on Friday. So I'd rather be short it than long. Zen here, I had an alert going off. Zen was in our weekend letter. Yeah, Neo for Diego. This was on my short watch list today, actually, because electric vehicle, and it's extended weekly and monthly, and it has this power bar over here, which is strength, but it had a negative Barron's article, these Chinese EVs, and I think it had a secondary offering also, but this was on my short watch list. QS has been on our short list, another one that went vertical under the pre-market lows. Could be a day trade. AI, another recent successful IPO. There was a lot of talk over those Airbnb and Dash, just the ludicrous valuations. I forget which one. I think I heard CNBC saying one of these is valued more than Goldman Sachs. That's a slap in the face, isn't it? I mean, come on, you're driving around your pizza delivery service and you got 100 billion valuation, really? Really? Space. Yeah, space. I read in the paper on Saturday that they had a space launch that they had to abandon when a rocket didn't go off, and that was my first thought too. After everybody being safe, I said I wonder what that's going to do to the stock on Monday. It's gapping. I don't know. A tier 1 gap was JKS on Friday, right? That's a tier 1. It's gapping just under support. So this one is not. Why? Well, because it's gapping a support. I don't know what it's going to do. So that's a big difference in gappers there. FSLI. Yeah, we entered a put spread on our naked put on Friday, and yeah, that looks good. I have a lot of bullish patterns. A lot. I don't know what got this thing ripping on Friday. Probably biotech of some sort. Virgin Galactic here. No, space is Elon Musk's company where he's trying to send people to space. 37 bucks. This trades very wildly, so I don't like the way it trades, but it's a bullish gap over this prior pivot. I don't know, maybe 30-minute high. It's Branson. Okay, all right. So Virgin. Okay, Virgin. Oh, okay. It's not Musk. Gotcha. Okay, all right. Well, thanks for that. All right, thank you. So, what is Musk's company? Is his not public? SpaceX not public. Got it. Okay. It's just a toy for him. All right, 855. This, I'm assuming that was a bio. Also came in hard, gap from the prior high. I have no interest in that. Riot. We were in this from this igniting bar, and we took our profits. It's going to take time to give us a new entry. Uh, 16 and a quarter. That's a big gap up now, far from the 20. Have no interest. AZN is buying a company, so that's gapping down. Wow, bearish gap down to that prior low. Arvin, 69 inch. Wow. From 29 to 69. Look at this monthly. It's gapping over this monthly. I don't know what is going on with that. But if you were long, you were having a good morning. Dropbox has had a couple really nice days recently. Gapping up again. There's the space we talked about. Gap's too big. BFT. That was a nice gap breakout here. Varu, big gap, nothing to do. Sedger I like. It's, keep an eye on it for day trade, but also to sell puts. Pins over Friday's high, I like. MyGen over Friday's high, I like. I'll tick over 1,000. So Qs, let's even though it went against us because of time decay, we still have an open profit on the Qs. But let's use 5-minute high. The Qs are starting out strong here. Netflix, yeah, we had a lot of trades in the letter. Netflix was one of them. Netflix over the 5-minute high is fine. Matul on our put spread. LYV. It broke out. You just got to put it in a 5-minute thumbnail and see if it sets up. Hey, look at our DAR. Look at this. Nice. We're long this. Beautiful, beautiful breakout here. Red bar ignored breakout.